Hi, guys, and welcome to the 34th edition of the weekly trading wrap up, where we talk about the week in markets from a trader's perspective, what to focus on, and what to ignore. So, let's begin. As usual, we are looking at a picture of the market, the S&P 500, and this is the week right after the 4th of July week. This is officially, quote unquote, the summer for the stock period, because after 4th of July, all the big wigs go up to their, on their European vacations or in the house in the Hamptons or on their super yachts. It's a good life, and they take the summer off. So we shouldn't see crazy moves over the summer, and that's exactly how we're positioned. However, let's get back to the picture here of the S&P 500. This red arrow denotes the week of the 7th. Monday, Tuesday, Wednesday, Thursday, Friday, a nothing week, a consolidation week. So, as usual, let's go to the first stage of our session, which is the technical picture. I mean, it's pretty much the same as last week. Uber bullish, consolidating at highs. Let's bring in the moving averages. The red is the 50-day moving average. The blue is the 200. Ignore the rest, not important. These are the two major ones. We had the golden cross a couple weeks ago. Super bullish. New highs, consolidating on new highs for about 1 to 2 weeks. This is very, very bullish action. Okay. However, a negative would be that we are trading very far above the 50-day. It's very rare to see that. And the 200. 200 could persist, but the 50, we might, even let's say we can resolve this issue by either staying at this level while waiting for the moving average to go up and meet the price action, or we can drop. Okay. To me, because we're heading to the summer and nothing big is really happening, I suspect we have some kind of let's get rid of the moving averages. I suspect we're having some kind of topping action like around here. Some kind of topping action before the market goes down, yet still maintains the bullish tendency. So I think that's why, even though we're at highs, we're getting very stretched here. And like I said, you should have some short exposure. Not a lot, but some short exposure at this point. Okay. So technical picture is not complete without the sentiment. We look at the sentiment, the fear and greed index. At extreme greed, right at the border of greed and extreme greed. It's probably more because this market momentum is probably at extreme greed. It's been broken for a while, but everything else is at extreme greed. Put call ratios, breadth, strength, etc. We're at very greedish. We have very greedy sentiment. And the other thing that we look at is the AA Investor Sentiment Survey, which comes out on Thursday, and 41% bullish, slightly higher than the average, but we can see 2 weeks of bullishness. However, we're still pretty bearish. That surprised me. I thought we would be much less on the bearish. So this is 2 weeks of, let's say, mild bullishness, not enough to get people super long, not enough to really scare the market. So that's why I think, given the sentiment, we are high here. Not extreme greed, but we are high here, and we're starting to get bullishness in the longer term, I guess, AAII sentiment index. So that's why if we do drop, I don't suspect the drop will be big. It'll probably be something like this here, maybe a little drop before going up and continuing to go higher. That's what I think is going to happen eventually. But we'll see. It's up in the air, but I still think that we're going to, head into a sort of choppy sideways market for the summer. That's why some short exposure is warranted. And you shouldn't be super heavy here. I mean, you should be net long, but you shouldn't be super heavy at this point. Okay. I don't like to get all in when everybody's super bullish. Okay. So we'll wait. Now let's move on to the macro picture. What happened in macro news? Well, this week was dominated by tariff talk. President Trump started talking tough about instituting tariffs on Canada, instituting tariffs on Europe, etc. He also instituted a big tariff on copper. What was it, 50% on copper imports? And then, of course, the copper price goes up. But the macro is basically dominated by tariff talk at this point because there's nothing really else happening. The FOMC minutes came out and no big deal, same as always. What else did we get for the macro? Okay, we got the initial jobless claims as always, and they came in at 227,000, which is great because it's lower than the 232,000 of last week. As mentioned before, we started to get a little worried when it was consolidating at highs, but the fact that it came down means that everything is still good. Our macro picture in terms of jobs, it's holding up, nothing crazy. The other thing that came out is the GDPNow forecast, and they about 2.5%. It's tough to see. 2.6% they're expecting. The Atlanta Fed GDPNow estimate is expecting it to be at 2.6% for the second quarter. So again, as long as the economy is growing at 2 to 3%, it's one of our underlying macro trends that we've always look at. So nothing to worry about on that front. And because of this good jobs figures, we also had the jobs report that came in now. They beat last week, so you have good jobs beating, you have initial jobless claims going down, GDP up. So what does that do for rates? Okay, well, the rates, we're looking right now at the Fedwatch tool. And for all of 2000, I clicked it on the all of 2025 here. The market is expecting 2 rate cuts. 4.25 is where we're at. 43% chance of 2 rate cuts. It used to be 3, but because the economy is doing so well, I got cut down. It's not necessarily a bad thing. It means that the economy is doing well, so we can continue to go up. However, my view still stays the same. Because of this fact, I think we're going to stay higher for longer. Okay, so we look at the US 10-year. See, up, still staying at the 4.4%. It's not budging. Okay, so you will have the US 10-year up, and by consequence, TLT still staying at the lows, okay, which is the 20-year bond, still staying at lows. Okay, this is why I think that the Fed is not going to cut rates this year. I don't think the Fed is going to cut rates until they see a negative inflation print month over month. That's my conclusion. I mean, why would they? I mean, the economy is doing well. Keep the rates high. Market is at all-time highs. Why cut rates? Everything is going for you. Keep the rates high so it puts a barrier on inflation. It keeps inflation down while everything else is going up. Great. I don't see any reason why the Fed would cut if inflation is not coming down, if we don't have some kind of deflationary input, or if the market starts going down a lot, then I think the Fed will cut. But it'll be pretty stupid for the Fed to cut with markets at all-time highs and going up, and people wanting to jump head over fist into this quote-unquote new bull market. It is a new bull market. But now everybody's jumping in. Why would the Fed cut? Okay, so the Fedwatch Tool, 2 rate cuts for all of 2025. Okay, so that's it for the macro, and let's talk about things that I've noticed this week. It was a very good week for the metals. We always talk about the metals. I mean, I hate to keep harping on it, but gold rising or staying high in the summer doldrums is a very positive sign. Gold stocks are still ripping. Gold stocks are still doing very well. So we have gold at highs, but of course we mentioned copper before because Trump is putting a 50% tariff on copper. I don't think it's going to stand, but even before that, I mean, this is when this day rate, this is copper, by the way. This is the week of copper, rip. Okay. Monday was right here. Actually went down on Monday and then ripped on Wednesday when Trump announced that 50% tariff. It's still holding at the highs. Okay, I was long copper itself via the CPER, United States Copper Index Fund, and I got out a sizable portion of my position at 35. Okay, because I had some call options that will expire next week. So I took the profits. $30. The strike was 30. So I paid like average price of 75 cents for those. Long time ago, around here. 3 months ago, I think. Yeah, when it was consolidating. And now it's starting to pay off. So copper up because of Trump, but it was up even before that. Copper is still strong in my view because of the long-term bullish fundamentals on this metal. Okay, there's going to be a supply crunch coming, and there's not enough of a production ramp up to meet that supply crunch. We're talking years. We're talking about by the year 2030. We're starting now, but it's by the year 2030 we're going to be in some kind of significant or large copper deficit, in my opinion. So that's why copper's up, and we like copper. And the other thing that we see is silver. Okay, silver on Friday ripped. It was consolidating for 2-3 weeks. As we said before, we want this silver breakout. After the $35 level was broken, we didn't want to see one of those like meme type of silver squeezes. You know, buy silver, silver squeeze. It spikes up to like, from 35, it goes to like 38 in one day, and then the next day it spikes back down. We wanted to see a real move, okay? And this is a real move. Once the 35 level broke and it was being defended for a long time, you can see it goes all the way back, this 35 level. Once it got broken and it stayed there, that means it was real. You know that. And of course, when something is real, it tends to go in that direction for a while. Okay, it tends to continue. So that's why I see silver. We can go to the 40 level. And remember, in silver, let's go to the monthly chart here. Silver, the big levels are at 50. Okay, we see the 50 in the 1980s, and we saw 50 in 2010, 2011, right? That's where we could be headed, 40 and 50, if this silver spike happens dramatically as it does. You can see here, within like 4 months, the silver price in 2010, 2011 went from 17, 18 bucks to 30, okay? And then consolidated for a month, and then another 3 months from 30 to 50. It happens fast. Okay, this is like a 6-month period. Okay, and then years of nothing. So that's what happens in these metals. You want to take advantage of these periods when they rip, then you want to get out. Okay, but as of right now, super bullish. Okay, so that's it for the metals that I've noticed. Another thing that came out that is very interesting this week was rare earth elements. Okay, because China has a monopoly on those pretty much. So Trump wants to level the playing field. Okay, so what we look at is the stock that we look at is MP Materials. Okay, not a very good stock for a long time. It's been in a downtrend, but after this announcement came out, which was the Department of Defense, MP Materials, entered into a multi-billion-dollar commitment to catalyze domestic production. So basically, the government is going to give MP Materials billions to start building magnets and mine rare earths in the US instead of being reliant on China. Okay, so MP Materials ripped on that. It was ripping before, maybe in anticipation. Then you had a flag, which is still bullish, and then the rip here. Okay, how I'm playing this? I'm not playing this with MP metals, MP Materials, because to me the rare earth element business is a bad business. It's a money-losing business. Maybe with DoD support and government support, this turns into a government. I don't want to say the word, but let's say a government-dependent pig, dependent on government subsidies, like I don't know, Tesla or Palantir. I mean, these companies do well when they have massive government contracts. So at this point, MP Materials, their number one client is going to be the government. So I guess they could rely on a steady stream of income for that. However, what I'm looking at, the other one is the Energy Fuels UUUU. Okay, this stock is a perennial loser. It's a uranium mining company, but it also has rare earth elements in its mix, along with vanadium and other things. But to me, this is on a downtrend. It's a bad stock, and I'm looking to short it. I'm not getting my price yet, but if it stays at these levels, I'll probably get my price. I'm trying to short the six level because I don't think this is enough of a move. Just because MP Materials got a contract doesn't mean that Energy Fuels will. I mean, they might. We'll see. But to me, I don't think this company will benefit from that rare earths U.S. domestic strategy, because it's not uniquely a rare earth company. It's a uranium company. Rare earths is just a section of its portfolio mix. So that's why I think these guys might not make it. So we're looking for shorts. This might be a good one. Okay, I'm trying to get into that. So that's the big news on the rare earth element front. And if you look at MP, it's coming to the highs. If it breaks that, like it could. I'm just keeping an eye on it. But from right now, for me, I'm looking to short UUUU Energy Fuels based on this move. I don't think it's sustainable for them. It might be sustainable for MP, but not for UUUU. So that's it for now. We're entering the summer doldrums. Is going to be fairly uneventful, as you know. Let's recap. I think a bullish market, of course. Sentiment is bullish, but not, well, maybe here. AI is bullish, but not enough to derail this bull market. I don't think everybody's super all in yet. I expect a temporary downward move and then choppiness going into the summer. We'll see. My number one scenario is choppiness, summer doldrums. However, number two scenario is very close, is low volatility melt up during a very, how can I put, a very thin summer trading session. Okay, so that's what I expect going forward. Let's see what happens next week. Later, guys.